Man, I love earnings season. It's like the start of the NCAA tournament. There's so much going on. These companies reporting like crazy before, after the bell. They have just lists like what these companies did, where their stocks are going. List 30 or 40 every single day. The ones that are up, the ones that are down due to earnings. There's so much excitement. And for me, I mean, look, this is what I love to do. Listening to the commentary during the conference calls. Those CEOs and CFOs go through every number over the past quarter. They also usually issue guidance, unless you're Boeing, which is kind of amazing. The only company I know in the last 5 years that removed their guidance, so cutting production, then they removed their guidance, which means the cut in production wasn't enough, right? So the numbers aren't right. And the stock's actually up. I don't think I've ever seen that. I've never seen a company say, hey, we're not going to offer guidance for the first time in a long time because we really don't know what's going on with our number one product and how much it's going to be cut right now. And the stock goes up. Interesting. And I realize when a company like iRobot comes out, reported bad numbers, which is fine. Every company, hits or misses every now and then. The stock has risen tremendously over the past few months, but it's getting crushed today. It's down 20%. And the CEO, gets on a call. And they're all optimistic, right? These guys are usually optimistic no matter what. Even if their stock is down 15, 20%, there's always optimism. There's very rare when a CEO just says, hey, you know what? We have to do a better job here, which is kind of refreshing. No. There's a small thing. Everything is great. We executed this quarter, and the stock's down 20%. We executed. We did what we said we were going to do. Guidance is a little light. It's just not getting killed. But just listening to them talk while, just reality is really setting in for all the investors, it's kind of funny. And digging into that call specifically, you have the CEO talking about tariffs. Well, tariffs are hurting us, and we're going to raise prices to offset these tariffs. And I'm thinking, why are tariffs hurting you? And we're at a truce right now, right, between China and the U.S. Negotiations going great. Most people believe there's going to be a deal next month. Larry Kudlow just came out and said that. But you're looking at tariffs where it's supposed to be, a potential 25% tariff and U.S. back and forth with China. But the company they say they're modeling for 10% when it comes to tariffs. And again, when you take a step back and look at this, it's pretty crazy because they're saying, hey, we're modeling for 10% tariffs. Again, they're talking tariffs, right? Very few companies are talking tariffs right now during this earnings season. They were talking about it 2 quarters ago. Now negotiations are better. Everything's pretty cool on a tariff front, right? But they're saying it's going to cost them modeling between $20, $25 million on a 10% tariff. They've been saying this, iRobot, for the last couple quarters, which is nothing. It's a lot of money, don't get me wrong, but it's nothing for a company that's expected to generate $1.3 billion in sales this year. So why are you even talking tariffs? Not to mention, again, they've been saying this on the past few earnings calls, but tariffs should be a non-issue. I mean, it's like Whirlpool complaining about tariffs. It's like Harley Davidson complaining about tariffs. Guys, we just had the biggest tax cut in the history of the United States. Companies are reporting blockbuster earnings, record earnings. Yes, tariffs hurt a little bit, but you're getting a massive, massive amount of money due to the amount of taxes you say because we cut taxes on a corporate level. And when you look at that, and I explain that in the auto industry, like the amount of money auto companies are making due to tax cuts compared to even a 25% tariff is nothing. I mean, if the tariff was all alone, we didn't have tax cuts, yeah, it's going to hurt earnings. Maybe it hurts earnings by 3-4%. But you're getting a 10, 12, 15% boost, some of these companies, from earnings. From the tariffs, where 2% is from the tax cuts and 2% from tariffs. When you look at this, put everything together, you break down steel, you break down autos, you break down all these industries, everything we import from China, it's a non-factor. And the fact that you're mentioning it and even saying it's going to cost us $20, $25 million, which is basically nothing when you're generating $1.3 billion, makes me think there's something else going on within your company. And this is a stock that went up tremendously. I'm talking about maybe the past few months from 80 to 130. Now it's trading at 100, at 20% after earnings. But something else that I noticed when you listen to this conference call, you look at iRobot, they launched a new Roomba vacuum. It's called the i7. And they're starting to push it out in numerous markets, right? It's in the U.S., but it's going to be available in several international markets. And this product is the company's primary growth driver 2019. That's not me talking. That's them talking. That's their primary growth driver. So management said with this specific product, the demand was ahead of plan for this product. And they also said we increased prices on this product during the first quarter to offset tariffs. Again, tariffs is kind of a non-issue. Should be. Now, this is interesting. So you're saying demand was ahead of plan, yet your revenue fell short of estimates for the quarter. Margins fell 50% from 53% from last year's quarter, from last year's comparable quarter. And I have to tell you something. The rumor vacuum, when I was at the CES this year, even last year, but specifically this year, there were at least 10 companies that make the same product. Okay, I even posted some pictures on Twitter. Handles at Frank Kersey if you want to take a look. And I reported this. So you have 10 companies basically making the same product, and these products were climbing walls and washing windows. I'm not kidding. I have videos of this. So it's like a room that washes windows outside. You don't need those big guys, like, which I kind of like, right? From New York City, and you're looking up there, it's like, oh, man. And they're just, washing windows in 40, 50, 60-story buildings and stuff. You don't need that anymore. And this was amazing, some of this stuff. It was just better technology than what I saw with iRobot. And for a company that says, hey, this is going to be the basis for basically all of our growth, our profits going forward, 2019, probably beyond, and you're raising prices on a product that's not really proprietary, there's something more going on here. Because when I look at companies like that, when I look at Whirlpool and Harley-Davidson, they could say all they want about tariffs. Nobody's buying motorcycles, and Whirlpool's not getting it done. That's what it comes down to. They're warning last year. Not everyone was warning. Everyone was concerned about tariffs. They weren't issuing, crazy guidance, very conservative. But, man, you should have made a fortune off of tax reforms. And you're talking tariffs. That's the reason why most S&P 500 companies are reporting record profits. So it is amazing to see what companies say and what they do. But getting back to iRobot, and again, the stock is down a lot today. I think people are seeing what I'm seeing. It just didn't make sense. You're raising prices for the product. You're saying demand's great, but revenues are lower than expected. I don't get it. Not to mention, are you really going to be able to raise prices and have that pricing power when there's so many products just like this on the market, especially in the international markets? But when I look at this, and I see lower margins, weaker than expected revenue, yeah, I'm going to be interested to see where the company's trading over the last 6 to 9 months. But the most important part of this, and the reason why I'm bringing up iRobot, is because when it comes to technology, and we all love technology, we all invested in technology. Technology's been one of the hottest sectors since, the credit crisis. Still continues to do amazing. All the biggest companies in the world are, Facebook, Google, Amazon, Microsoft, basically the 4 biggest companies in the world based on market cap, all technology. But when it comes to technology, it's all about patents. It's intellectual property, protecting your technology. Because if you don't, there's a few companies out there that I just mentioned, like the Facebooks, Googles, Apples, Microsofts, that have hundreds of billions of dollars combined on their balance sheets. And they're ready to jump all over your great idea in seconds if you don't lock up that technology. And we've seen it with Facebook basically copying everything that Snap did, right? Snapchat invented. We've seen it with GoPro, Fitbit, BlackBerry. So I'm bringing this up because if you're going to invest in any technology company, especially small or mid caps, you better understand its IP portfolio. Make sure they have patents on their signature products. Make sure they lock up, not pending, not patent pending. You hear all that patent pending. I love that. Patent pending means nothing. It means nothing. Big deal. You fill out some paperwork. It's like I have a loan pending for $25 million to buy a mansion in the middle of Florida. It's pending. It's pending. What does that mean? It means nothing. It means you don't have a patent and you're not going to have a patent. But you want to lock up this technology.